Tesla this time. The EV maker's stock has slipped. It's gone down almost 70% this year, and it's set to end the year as the second worst performing stock in the S&P 500 pack. Let's find out why. Let's put it in perspective. My colleague is joining us. Srishti is here to tell us why investors are feeling these jitters when it comes to Tesla as a stock. Srishti?
A company which was over the years was seen to be a game changer is not seen to be winning the game in the stock markets, and I'm talking about Tesla Inc., which on a YTD basis has now dipped 69%. So let's dig deep into Tesla's 2022 collapse. So if we look at the stock history, let's start with that. The stocks actually saw quite an electrifying move after the stock market crash back in 2020, giving a return of over 8 times in that particular year. That helped the company earn a place in S&P 500, and at one point in time, this particular company was actually one of the 5th most valuable stock in the gorge. But let's talk about the latest trigger of the fall that we are seeing happening. So reports of the plans of temporarily halting the production in China facility has actually rekindled the fears on the demand side. The electric vehicle maker, the market valuation has now shrunk to $345 billion, and that's actually below from the companies of the likes of Walmart Inc. and even JP Morgan and Chase. But not just the top boss of Tesla, that is Elon Musk, keep coming in the news on the back of Twitter takeover and the related distractions, but the company also recently made it into the more of the news because Tesla was seen to be offering a discount of $7,500 in the US, and that too for a delivery before the year end on 2 of the higher selling models, once again rekindling the fears on the demand side. But what is interesting to know that even and despite such sharp fall in the stock price, analysts continue to remain with their bullish stance in this particular counter. But for that, we have to wait to see how the innovation curve of Tesla takes the stock from here on. But for now, 2022 was definitely not a great one for this company.
That's right, Srishti. It has been a tough year for Tesla, and we'll get you perspective on that. But meanwhile, let's tell you what happened on the large street. Today, we've seen this range-bound trade take place, and this ahead of the December FNO expiry. The benchmark, the Nifty, has dropped 50 points from the day's highs, and it has closed in the red, but it has stayed above 18,100. In fact, the Sensex too has managed to hold on to that level of 60,900. And sectorally, we've seen the Nifty PSU Bank Index snap that winning streak of 2 sessions that we've seen it at. And among the gainers, we've seen auto stocks, we've seen media stocks, also realty stocks. All of these had a good run. Let's find out more about today's trading session. Anisha, my colleague, joining us with the highlights. Anisha, how did we look when we ended trade today?
Well, after starting off in the green, the Indian markets fizzled out most of its gain, ending a tad bit in the red, and it was that dip that we saw in the last half an hour that actually pulled the markets lower, though the Nifty managed to just hold on to that 18,100 mark. The Sensex also saw a minor cut of just around 10 to 20 points, though the mid-cap index managed to eke out small gains. And if you look at the advance decline ratio, though it was pretty much even Steven, there was a bit of positive tilt towards the advances, and that's the good news coming in there. As far as the sectoral churn is concerned, well, the public sector banks suddenly came under a lot of pressure in the last half an hour. So whether it was Indian Bank, Union Bank, Central Bank, they suddenly saw a sharp knock, and that's the reason the public sector banking index was down today in trade, and that dragged the entire bank Nifty also lower. What did well was clearly the auto pack. So TVS Motors went home with a gain of almost 4%. M&M, Maruti, Motherson were some of the other names from the auto pack that were doing quite well. But in terms of, the individual counters that were shining in trade, it was Titan that finally came out of the slumber today, an uptick of almost 3% on that counter. Plus, you had UPL, which was doing quite well. On the losing side, it was Bharti Airtel coming under pressure, Apollo Hospital, Axis Bank, Bajaj Finserv were some of your other key names. From the broader market, interesting to watch out for the Adani group of stocks because they were quite active. Whether Adani Gas, Power, Wilmar, etc., they were all trading with a gain of 5 to 10%, and the entire fertilizer space was abuzz. RCF up 14%, FACT, which is up almost 120% this month itself. GSFC, Deepak Fertilizers were some of your other top gainers when it comes to the broader markets. On the losing side, it was Keystone Realtors, i.e. Rustomjee Group, which was down about 5%. But overall, a tad bit of weak day coming in for the Indian markets.
Yes, rather lackluster day, one would even say. It had no clear direction, but we'll keep watching the markets right now on Wall Street as well. Look at how the Dow Jones, the Nasdaq, and S&P 500 are doing. All of them are in the green, raised about 3/10 to 4/10 of a percentage point up move, and I'm particularly watching the Tesla stock right now, which is also up in the green. It has seen quite a drubbing in trade, but now it is not doing too badly for itself. And Tesla as a stock remains in focus. Let's just discuss what's happening over at Tesla. And for that, Peter Cardillo is joining us, Chief Market Economist at Spartan Capital Securities. Peter, great to have you with us this evening. Not just Tesla, but even Apple. These two stocks have tumbled in recent times. And this over growing concerns about delays in their production lines in China. As the zero COVID policy is pulled out, China making that attempt to revive its economy, it has suffered an onslaught of fresh COVID cases. How severely do you see tech stocks suffer because of this from this point onwards?
Under pressure for most of the year. In fact, they basically led the general market lower. And the fact that the Federal Reserve has changed course in its monetary policy, the higher rate structure certainly has impacted the sector, and they've been the sick man of Wall Street. So I think going into next year, it all depends on what the Fed, decides to do, and they're very sensitive to rate hikes, and of course, the general slowdown in the global economy.
These are large factors, but there are certain pockets within the tech universe which are seeing these green shoots of recovery. Amazon being one, Meta being another. Why are Tesla and Apple now facing the brunt?
Well, I really, can't really comment on individual stocks, but I can tell you this is the reason I think for the weakness is just a continuous slide, and at one point or another, investors are going to probably, have to make a hard decision, and I think, institutional selling and just people that were taking losses has probably contributed to this.
True, and right now we are looking at a time that global investors are getting cautious ahead of additional interest rate hikes, Peter. The ongoing war in Ukraine, there is no end in sight over there. Are the prospects of a bigger global slowdown getting more emphatic now if China fails to revive its economy and then drag down the growth prospects of companies beyond the tech stocks, even like Apple and Tesla that we are talking about tonight?
Absolutely. I think, the fact that the perception of a global slowdown, a global recession, I should say, is one of the main concerns. And that's why we've had this sloppy market. And consensus indicates that we're headed for slower growth for perhaps several years, not necessarily in a recession, obviously not. But once we come out of the recession, growth is going to stay sluggish. You might be seeing GDP growth around maybe 1.5%, 2%, much more than that. So I think that's one of the pressing issues here.
Fair enough. Thanks very much, Peter, for joining us on this discussion. Of course, over at Tesla, Elon Musk is fighting another battle that are focusing too much on his role as CEO of Twitter at the cost of Tesla, some investors would argue. Now, whether or not he's able to make amends, relinquish his position at Twitter, it's a post that he put out, and many of those people who reacted to his tweet did say that he should step down as the CEO of Twitter. Whether or not that happens and whether he can pull the house in order when it comes to Tesla, that remains to be seen. Meanwhile, we are turning back to the Indian markets and what we are seeing over here in terms of Nuvama, which has